We're able to have the Ethereum Virtual Machine and all of the tooling, developers, mindshare that come with that, along with the extremely high performance that you see with Solana. Is that if you're building like open source tech, the tech doesn't really end up being the differentiator.
Jayendra Jog, co-founder of Sei Labs. Justin Barlow is head of BD and investments at the Sei Foundation, the company behind Sei Protocol. Sei Protocol is the first parallelized EVM blockchain in the market. Its twin-turbo consensus mechanism, optimistic transaction parallelization, and novel storage interface reduces transaction latency, increased transaction throughput, and makes it the fastest next-gen L1 network.
So Jay, from what I've been hearing, Monad is also parallel EVM. They also have optimistic parallelization. They're also working on state storage. In your opinion, what are some of the differences?
Ecosystem has grown exponentially over, the last 12 months or so, going from, really dozens of projects, right, to hundreds across DeFi, NFTs, gaming, and similarly going from a few thousand DAU to 50,000 today, to me, have been some of the most exciting areas so far.
So this is DeFi Llama showing like TVL on Sei Ecosystem. Basically, since Sei V2 went live, like TVL has started to spike. And what's really interesting is just where this TVL is spiking. Like out of like the top 10 projects here, almost all of them are EVM projects. Let's say a full node on Ethereum, you want to have basically the minimum full node requirement so that more people are able to run a node. When you start adding more state load, it becomes more and more difficult for like, there's two higher level concepts over there. Basically, we just found a way to really compact the amount of data that needs to be stored. So there's 60% less data that needs to be stored. The massive unlock, like it's hugely beneficial for reducing the amount of state load.
Hey guys, welcome to the Open Metaverse show.
Hey man, thanks for having us on.
Thanks for having us.
Yeah, such a pleasure to have you guys. I've been hearing about Sei a lot, and it's great to have you guys present. Just to kick things off, we'd love to learn more about your crypto journey, how you got into crypto, and what was the inspiration behind Sei.
Do you want to go over your journey first, Justin?
Yep. So my name is Justin. I am currently head of business development and investments over here at the Sei Foundation, helping to spearhead ecosystem growth. Previously have been in the broader crypto space for the last 7 years professionally. Started off my journey by actually launching one of the early long-short funds in the space. Then went on to spend some time with some of the major TradFi institutions like Millennium Management in New York, and the endowment at my alma mater, USC, helping them figure out some crypto strategy, also working on various initiatives across, venture and private equity. Then went on to spend a little bit of time at the TIE, where I was a research analyst, putting together long-form research and content on various L1s and L2s. And that's where I really started to build my thesis around kind of the value accrual on the at the L1 side. Around that same time, I actually founded, bootstrapped, and eventually exited a business in the space as well. Interestingly, it was in the crypto ATM business, which is a pretty wide departure from what I've done for the rest of my career. It was a very interesting experience to get really like hands-on in building out something with physical locations, right, rather than sort of this like nameless sort of software approach, right, where you don't actually have to interact with users at the ground level. After I exited that business, I started looking for opportunities to join another, basically an L1, with the thesis being that there was no better way to build my knowledge of the core infrastructure in the crypto space than working directly at an L1 itself. So stumbled upon Solana when it was, I would say, fairly a non-consensus bet. Ended up joining the team over there in 2021, originally on the BD side, and then later moving over to Solana Ventures, where we invested in really all the top projects in the Solana ecosystem, the Phantoms, the Magic Edens, the Tensors, the Step-ins of the world, and really helped to build out the early stage ecosystem over there. And then jumped over here to Sei just about 9 months ago, again, to really spearhead ecosystem growth, take a lot of the lessons that I learned in the Solana eco, as well as from researching, various other ecos, and incorporate them into, a broader plan for how do we scale a new ecosystem with a lot of exciting components to it.
All right, I can go next. I'm a co-founder over at Sei Labs. My journey to crypto, I mean, honestly, it began back in 2017 and pretty amusing because back then I was studying computer science and new grad software engineers at Facebook were getting $100,000 signing bonuses, which was just wild to think about. But yeah, new grads, they'd basically be getting a ton of money. And my friends that were graduating back then, they took most of their signing bonus and they put it into Ether. This was at $40 per token. And I saw this insanity kind of ensue after that, where like everything went up and then everything came down afterwards as well. So that was kind of my initial exposure to crypto. After that, I graduated. I was living in Menlo Park, and my roommate at the time, he was like getting his master's from Stanford, and he was building a crypto project. And they were going through Binance Labs, and that was kind of my first exposure to being a builder because I worked with him on a couple of different things, and that's when I learned more about like how blockchains actually work, how to write smart contracts, all that good stuff that's like pretty relevant for us now. But yeah, so that was kind of the initial exposure to crypto. From Say's side, like I think a lot of this honestly began during my time at Robinhood. So I was there when the GameStop saga unfolded. So for any listeners that might not be familiar, back in 2021, start of 21, there were a ton of meme stocks that were just like going straight to the moon. And the reason was because retail was like rallying behind like around a dozen names. And there started to be a short squeeze where institutions were like, okay, these stocks like GameStop, AMC, their valuations are kind of nonsensical at this point. They were going to be shorting them. And when you're shorting something, you basically have to borrow the stock and then sell it. And then you have to eventually buy it back and then return the stock. So there's this concept of a short squeeze where if the price starts going up too much, then people that are like losing money on their shorts, they then need to buy back that stock in order to close off their position, which leads to more buy pressure. So yeah, like there was a short squeeze that started to happen because the price just kept going up. And then there was this entire narrative around how retail is feeding institutions. It was like a true Robinhood moment, right? But then just one day out of the blue, Robinhood turned off buys. And that ended up being one of the biggest points of friction for that entire movement. Because when buys are turned off, you can't have that upwards pressure anymore. And understandably, like a lot of people in the United States were extremely unhappy about that. And I think what made it worse is that Robinhood did an exceptionally poor job of communicating like what was actually happening internally. Like no one knew what the hell was happening. As an insider, I had no better idea than like what people on the outside had. So a lot of my friends were hitting me up. They're like, yo, man, what the hell is happening? And I had just absolutely nothing to tell them. That feels like shit. Like when you're kind of like, it's your reputation on the line. You're the person that needs to be answering all these questions. Like you have no idea what to do. So that made me much more, I guess, bullish on the idea of transparent and trustless verifiable system. Specifically, like having two dudes in a room that are calling the shots. That is not a good model. That was the case that happened at Robinhood. That's not the model that we should be having moving forward. So that was the original inspiration. And that kind of led us down this entire journey where initially we're like, let's build something like Robinhood, except build it on chain. Then we're like, oh, wait a minute. There's no existing infrastructure that works. Let's go ahead and build something like that's its own chain. That led us to eventually to what is now Sei. So Sei is the first parallelized EVM, where it essentially lets you combine the best of both Ethereum and Solana. We're able to have the Ethereum Virtual Machine and all the tooling, developers, mindshare that come with that, along with the extremely high performance that you see with Solana.
So Jay, if you thought about that moment, let's say if during that time if equities were on chain, do you think MOASS would have happened? Because given the market structure of blockchains.
Yeah, so I think in Robinhood's case, there was just complete opaqueness around like what was happening internally. I think if there had been some kind of a DAO structure or some type of like verifiability around like what was, I guess, what the deposit requirements that Robinhood had were with like these institutions, I think that could have helped substantially. But just in general, I think this idea of having systems that are like completely opaque is not the direction that we want. I mean, any financial system to be moving in. Like if you have no control over your money, that's really bad. So yeah, I definitely think that aspects of what blockchain introduces would have been extremely helpful there.
So Jay, right now I think we are in an environment where there are multiple L1s, multiple L2s. Why do you think we need another L1?
Yeah. So we've been building in crypto for a while now. And there's one thesis that we built up extremely strong conviction around. And that's the idea that the EVM, which is the Ethereum Virtual Machine, is here to stay. So I guess for like any listener that might not be as familiar, the EVM is what Ethereum initially introduced. It is the execution environment that processes transactions on Ethereum. And honestly, most major blockchains make use of the EVM. And it's exceptionally difficult to get developers to move off the EVM. Like basically every developer that's there in crypto right now, some number that's ridiculous, like 85, 90% of crypto native developers, are on the EVM, and it's extremely difficult to get them to move off. And I think there's a couple of different reasons for that. One part of it is just around bugs that could be introduced. Like if you are a guru with the EVM and you need to move to a different execution environment where even a small bug could could basically just result in your entire protocol getting drained. It's a really risky proposition to move away from the EVM. So I think one part of it is technical, but I think even more than that, it's because the EVM isn't just a tech stack. The EVM is much, much broader than that. It's fundamentally an ecosystem of the tech itself, but also the tooling, the mindshare, the developers, all the smart contracts that have already been written, like all this stuff that exists with the EVM that is only becoming stickier day by day. That's making it even harder and harder to replace the EVM. So we think the EVM is here to stay. The question then becomes like, what is missing from the EVM right now? So if you look at basically all the chains that are making use of the EVM and using Ethereum for data availability, they're not really able to get good performance. They end up running into upper bounds of around like 50 to 100 transactions that they can be processed per second. If you want this to be like a global state machine where like the entire world can be doing stuff on chain, you're only supporting like 50 TPS on a good day. It just doesn't work. What ends up happening is two things. Like there ends up being two fundamental limitations of this approach. One is that gas fees end up being super high. Like if a million people are trying to submit transactions, you can only accept 50 of them, then guess what? Whoever pays the most fees is going to be the one that's accepted. That's why earlier this year you saw things like 100 Gwei for per unit of gas on Ethereum. Like 100 Gwei is just ridiculous. Like if you need to pay like $50, $100 to get a transaction included, you're just pricing out most of the world. So I think it just ends up like if gas fees are too high, people just can't do anything on chain. And the second thing, which I don't think people really are exposed to as much, is it's extremely restrictive for the developer design space. Because as a developer, if you can only build an application in 50 transactions per second, you have to take a bunch of shortcuts. Like you have to make something that works with the limitations you have instead of building what is objectively the best application to be building. An example of this would be the concept of an automated market maker. Like these do not exist in the traditional financial world because they are less capital efficient. They're clunkier in many ways. But the reason they've taken off in crypto is because they fit the limitations of this kind of 50 TPS design phase. What we imagine is a world where we can remove these kind of limitations and be able to substantially improve both the developer experience and the user experience. And the question is then okay, you want to be improving performance for the EVM. How do you actually go about doing that? And the approach to that is pretty straightforward. You parallelize the EVM. So parallelization is the idea where instead of doing one thing after the other, instead of doing things sequentially, you do multiple things at the same time. And just one of the default things that has been done in technology for decades now, where it helps improve performance. And interestingly, it's not something that was actually that common for blockchains for a while, which is surprising. Because if you look at the EVM, it just executes everything sequentially. That's really easy for the developers that wrote that to implement it, but it doesn't really take advantage of the modern hardware that people are using. Like any modern phone, any modern computer, it's going to have multiple cores. You can process multiple work streams and get better performance. So that's what we're doing with it. We're building the first parallelized EVM. And this will unlock an entirely new type of design space and also help substantially improve the user experience.
Jay, so as far as my understanding goes, there's a little bit of mimification of parallelization. Like people use that word like, okay, we're going to parallelize, but there are different types of parallelization. Maybe you can walk our audience through the type of parallelization that you guys are building in Sei.
So I could just share the original blog post that we had made around the improvements that we've made with Sei V2. So last November, we announced Sei V2. And it's actually live right now. It was we had the governance proposal, mainnet upgrade that all happened in May. So everything that I'm going to go over right now is live on mainnet. And there's a ton of traction tied to that as well. But fundamentally, there were a few different things we introduced with Sei V2. Initially, Sei had COSM WASM smart contracts. We moved towards having COSM WASM plus EVM smart contracts. And these are fully interoperable, so one side can call the other, which, Sei is the first chain to successfully do this on mainnet. So I think that was a huge kind of UX improvement for folks.
In terms of adoption, so right now, relatively speaking, EVM and WASM, can you give me a percentage of smart contracts that are still being built on EVM? Because earlier you mentioned there is lendiness attached to EVM. So I'm assuming there are far more smart contracts deployed on EVM versus...
Yeah, that might be a question for Justin in terms of on Sei mainnet right now, what percentage of new contracts are EVM contracts?
Yeah, I would say generally speaking, what we're seeing is majority of new contracts being deployed are EVM. A lot of the incumbents, just because Sei only added EVM at slightly earlier this year are still on the COSM WASM side. And the team over here has really come up with a really interesting kind of workaround for interacting with COSM WASM contracts through the EVM, which Jay can share more on. But effectively, what we're seeing is a massive shift going on in the ecosystem, right? Where the average user who's coming in, the average developer who's coming in is coming in because they want to interact with a scalable, performant EVM, not because they're just looking for a COSM WASM.
Yeah, so maybe I'll steal a little bit of Justin's thunder here and go over what we're actually seeing on mainnet right now. So this is DeFi Llama. It's showing like TVL on Sei Ecosystem. Basically, since Sei V2 went live, like TVL has started to spike. And what's really interesting is just where this TVL is spiking. Like out of like the top 10 projects here, almost all of them are EVM projects. So I think to broadly answer your question, basically every new project right now that's launching is an EVM project. And I think this is for a couple of different reasons. Like, first of all, the COSM WASM developer pool has largely been exhausted already. Like when we started building back in 2022, that time we already got in touch with a lot of the COSM WASM teams, and there hadn't really been a huge growth in the number of COSM WASM teams. And secondly, I think that just because the default that people use when they come into the space now is EVM, like all new developers are generally becoming EVM developers. So I think that's why like basically all the activity we're seeing now is like EVM. So yeah, I guess going back to what we were talking about before, the second thing that we introduced is a new type of parallelization relative to what we had with V1. So I guess the initial question you'd ask, like there's two types of parallelization. One is optimistic parallelization, and the other is in a way deterministic, or like where the developers need to define dependencies. So in the approach where developers define dependencies, basically developers say that this transaction is going to be touching this state, and this can either be done by submitting a transaction to the chain itself, which is what was happening with V1, or it could be happening just within the transaction. There's all the accounts, which is what happens with Solana. This requires a lot more work from developers. And in general, we think that the cleaner the developer experiences, the larger the ecosystem can grow. So that's why the idea of optimistic parallelization became kind of a no-brainer for us. And with optimistic parallelization, developers don't need to do anything. The changes figures everything out. And I think this is huge for, I would say, two broader reasons. The first reason is because it lets people take code that is already there on Ethereum L1 and deploy it to Sei without any changes, which is a huge win because it makes it much easier for developers to get started, and it makes it much easier to like bootstrap ecosystem growth. And the second reason, as I was talking about before, is the simpler the developer experience is, the easier it is to grow the ecosystem. In general, I think optimistic parallelization is going to become ubiquitous in the future. Like improving developer experience is going to be the most important thing. And with optimistic parallelization, you're able to.
Yeah, just for audience, so this is similar to Aptos, and the deterministic parallelization is more closer to Sui and Solana. So your route is much closer to Aptos. Is that correct?
Yeah, that's right. And in general, we think that there's a ton of improvements to be making on the optimistic parallelization side as well. There's a ton of stuff that Sei Labs has been focused on from the research side, which we can go into if you're curious as well. But at a high level, like optimistic parallelization is the future, and there's a lot of different directions you can take it to make it even more performant.
Yeah. One follow-up on parallelization approaches. Does that impact fee market at all? Like one of the issues we have seen in Solana is the spam. And then basically to kind of counter that, they are thinking about like even parallelizing the fee market. So do you think from a tokenomic standpoint and from a gas fees standpoint, does this approach make a difference there? Or do you think it kind of increases the surface area of complexity for gas pricing?
Yeah, so this is actually something that we've been thinking about a good amount. At a base level, like from the user experience side, with optimistic parallelization, it could be the same as with not having parallelization at all. You can have like EIP 1559 style fees if you want to, where the parallelization aspect of it is just completely abstracted away. But if you think about it, like you ideally want to be running as many concurrent work streams as you can at any given time. So basically just making max usage of the port that you have. So there are ways where you can price resources, and this is where the idea of like multidimensional fee markets is going to become relevant for Sei in the future, where you can start pricing things based off of the amount of like sequential access that you need to do. This is kind of similar to like what Solana is doing as well. But yeah, like you're going to be able to have much more intricate types of gas price calculations. And from the user experience standpoint, you can abstract all of that away, but it's more just from like the core chain standpoint that you can like have much more subtle differences that can lead to better performance.
And Jay, I think another improvement you guys have done is on the state storage and sync side. Maybe you can also explain to our audience, maybe in an easier language, how is that an unlock and how is it How's it different from some of the other approaches out there in
Yeah.
the market?
So everything is trade-offs, right? So probably the biggest trade-off that comes with improving performance for any chain is that there's more transactions that are submitted, which then creates more blockchain updates that then need to be stored. So this is the broader idea of state float. So maybe like at a higher level, you can think of state as account balances. So like I have 10 say, you have 20 say. And you can also think of it as smart contract data. Like there's this Uniswap pool that has like these tokens, for example. And the more transactions that are there, the more states there is. And if you want to be running, let's say a full node on Ethereum, you want to have basically the minimum full node requirement so that more people are able to run a node. When you start having more state load, it becomes more and more difficult for like lower end hardware to keep up, which then arguably has centralizing effects where lower grade hardware won't be able to keep up. So then people are forced to run higher grade hardware, so then there's less people that can run nodes. Now, the way that we've approached this is through SeiEV. There's two higher level concepts over there. One is a memory mapped IEVL tree, and the second is async writes to this. Without getting too deep in the weeds there, basically we just found a way to really compact the amount of data that needs to be stored. So there's 60% less data that needs to be stored. The massive unlock, like it's hugely beneficial for reducing the amount of data load. And we've also been able to improve the overall performance by 287x in terms of like when writes happen. So yeah, I mean, it's just ended up being a massive improvement from how fast it takes to like process transactions as well.
Yeah, so it's very obvious. I think you guys have achieved higher throughput, lower latency. I'm just curious to learn about the validator side, like how many validators you currently have and what might be the hardware requirement given the throughput and latency achievements you guys have.
Yeah, so right now there's 39 validators. In terms of hardware requirements, it's not actually that expensive. It's pretty similar to like most other things right now. Like the core thing that we're doing is just we're taking advantage of hardware that already exists and like we're getting the best software performance from that. So it doesn't need like anything super fancy. In terms of how I generally think about validators, so like I think the entire industry is trending towards having a pretty clear pattern where it's like this range of like 30 to like 100, 150 validators that's all new L1s, all new, I mean, layer twos as well are kind of converging in that same direction. So I think that's where everyone in the industry is going to move to, where you essentially have smaller, sufficiently decentralized validator sets. And by doing this, you're able to have a ton of benefits around things like instant finality, where transactions can be like finalized right away. You can also benefit from having like slightly higher hardware requirements for those validators versus needing to have like lower hardware requirements. And by doing that, you're able to get much better performance. And then one core component of this will then end up being like, how do you maintain verification? Like, you want people to be able to verify transactions. And what I think the direction we're going to move towards is having like ZK verification. So basically having ZK proof getting generated for state transitions. And then anyone can run like client and be able to consume these ZK proofs to be able to verify the head of the blockchain. So I think that's the direction the entire industry is moving towards, and I think we're definitely at the forefront.
I guess right now there are two camps. One is like integrated slash monolithic, and one is modular. Kind of seems like you guys have achieved a monolithic design. But what are you guys thinking on the L2 side? Like, are you guys arranging through your stack, allowing other developers to build L2s on top? Some might call it L2s, some might call it network extension, however you want to frame it. Do you guys have a stack for that? Like, do you guys have a thinking or thesis around that?
Yeah. So in general, the way that I think about L2s on scalable base layers is that they only really make sense if you benefit from having customized infrastructure or dedicated block space. And I think this is true for like Solana as well. Like the idea of a general purpose Solana rollup getting built on Solana, I think makes absolutely no sense. Like I think anyone that's doing that, like they haven't really thought through why they're doing that, because there's no reason for anyone to build on a general purpose L2 if the general purpose L1 is scalable. The reason it does make sense, I think, ends up being for a few different reasons. Like if you look at Ethereum, L2s make sense because the base layer is not scalable. So this unlocks new block space, that's cheaper block space that allows more people to come on. And the other reason would be if you want to have dedicated block space or like more customized infrastructure, like let's say someone wants to build an app rollup on Sei. I think that would make more sense because you can have this customized infrastructure where you're taking, let's say you take the Sei approach and then you have this parallelized EVM, you modify that to build some kind of central limit based order book, and you don't want any other block space that's competing there, or you want to add in like some specialized components of that. I think that would make sense. In terms of like what's currently being offered, like that isn't like having some kind of like parallelized EVM isn't like the biggest responsibility or the biggest priority in the near term. I believe Justin can expand on this as well, but I believe there have been some teams that have already started forking Sei and making use of parallelized EVM. And I think it's becoming abundantly clear that like performance is important for everyone. And a year or 2 years from now, like if you can choose between having a parallel chain and having a like vanilla non-parallel chain, like you're going to 10 out of 10 times pick the higher performance parallel chain. I think the entire industry is just going to start having more and more of a focus on making use of these parallelized EVMs.
So Jay, from what I've been hearing, as per my knowledge goes, Monad is also parallel EVM. They also have optimistic parallelization. They're also working on state storage and sync and all of these things. In your opinion, what are some of the differences and similarity? And as you mentioned, there are like a lot of folks going around. How would you kind of differentiate with some of the more hyped up names out there that are private, like Monad?
I think that the most candid answer over here is that if you're building like open source tech, the tech doesn't really end up being the differentiator. Like if the performance is similar enough, if the components of like what you're building are similar enough, it ends up much more community in the ecosystem that end up being the differentiators. The approach that we've taken from day one is very much the Silicon Valley approach, where you ship it quickly as you can, collect user feedback, and then iterate based off of that. And I think that's allowed us to be the first one to go to market. Like we've already been live for more than a few months now. And my hunch is that similar to how that's been the approach that has been the most successful approach in Web2, I think that's going to be the approach that's also going to continue being the most successful in Web3 in the sense that allows you to more quickly build an ecosystem and have actual traction in the ecosystem. I think that's what ends up being the stickier kind of differentiator.
So is my summary correct? In your opinion, community, ecosystem, and lendiness is where the defensibility comes in.
Oh, 100%. Yeah. Like with open source software, you can just go and like Ethereum is completely open source. You can take Ethereum's code base, fork it, and then like try launching your own version of Ethereum. But that is not going to be anywhere near as successful as the original Ethereum because that's where all the users are, that's where all the liquidity, that's where all the mindshare, all that is. And I think that's going to continue being like the same case for other chains.
Justin, this question goes for you. We'd love to learn about the state of Sei ecosystem. Maybe you can walk us through some of the different sectors. So, for example, if I'm coming to Sei ecosystem, what are some of the DeFi apps, NFT app, gaming, deepen project I should check out? So maybe one by one we can decode this and you can help us out.
Yeah, I mean, happy to talk about it more generally, and then I'll talk about some examples. Yeah, I mean, from a high level, ecosystem has grown exponentially over, the last 12 months or so, going from, really dozens of projects, right, to hundreds across DeFi, NFTs, gaming, et cetera. And similarly, going from a few thousand DAU to 50,000 today as we record this podcast, right? And so obviously we're seeing some exponential growth, both on the product side, right, and also on the user side. DeFi and gaming, to me, have been some of the most exciting areas so far. They've been growing incredibly quickly as of late, in part because of renewed push here, in part because people are seeing Sei V2 work at scale, right, and the performance benefits that come with it. And also in part, candidly, because we've added some great new folks to the team who have been really helpful in making a push into some of these newer areas. In terms of, some names to call out here, on the DeFi side, names like DragonSwap and Yay have been growing at an incredible pace, attracting TVL, volume, new users, et cetera, and have really become some of the hubs for, say, DeFi, right, over these last few months. Both of those are, as we mentioned before, built on the EVM side. Similarly, Greedy Goblins and names like Cat vs. Monsters, et cetera, on the gaming side have really started to take off, getting hundreds of thousands of users signed up and ultimately translating into thousands of DAUs as well.
Can you explain what those games are?
Yeah, so the general approach that we've taken here, and I think it is a very pragmatic one, and this is a word you'll probably hear me say quite a bit because it's very core to our values, is that before you can build games that are, let's call them high fidelity AAA style games, you first need to have a user base, right? And so really what we had to solve for is a cold start problem. How do you get gamers into a new ecosystem, right? When they haven't interacted with it before and they don't have a lot of context on the ecosystem, they may not even hold, the native tokens yet, right? And so the approach has largely been around, okay, how do we start with some of these, let's call them, more easy to onboard, kind of lower hanging fruit type of casual games, whether they be Telegram games, whether they be simple mobile games, or whether they be on PC, right? But generally games that we think have the capacity to bring on many users in a way where a lot of the onboarding or the complicated parts of the onboarding are abstracted so that we can build a strong user base of gamers that then may go out and say, okay, what else can I do on this chain, right? Ultimately, what they'll end up flowing into is things like DeFi, things like NFTs, right, where they might buy in-game assets, and then ultimately other games in the ecosystem, right? And so the real approach has been, first, how do we build out kind of the top of that funnel by first having users in the game eco? We're starting to see that now. Those names that I mentioned are largely on the casual side, right? And you're going to be seeing a lot more of these casual games come down in the pipeline, and they're being launched really every week now. Over time, what you'll see is there will be higher and higher fidelity games that ultimately take a longer time to ship, right? And so if you want to make an analogy to other ecosystems, if you look at Solana, for example, something like a Star Atlas takes a long time, right? But in the meantime, what you can do is build a strong user base such that when a Star Atlas goes live, right, and you have like a product that you're really excited to show to the masses, you have a user base, right? You have volume, you have traction there. And then those people can flow in as the initial cohort of users, supporting a broader kind of ecosystem that hopefully will come a large part from, Web 2 games, right? And so we're starting to see this play out already, where we have more and more high quality gaming projects, reaching out to us and being more receptive to building on Sei, now that we started to build this casual gaming user base, right? As far as, some of these other areas that we discussed, there has been a lot of activity on the NFT front as well. So Palette and Market are some of the native exchanges for NFTs on Sei. They have done a really good job at bringing new users into the ecosystem, and have really done a good job of kind of building community. I think one of the key parts that people miss about NFTs in general is fundamentally they are community building blocks, right? These are ways that, yes, there is speculation involved. Yes, there is, utility for many of them through in-game assets or through IRL activations, things like that. But fundamentally, these NFTs represent communities, right? Very similar to meme coins, where we're also seeing a lot of activity. And so, one of the things that I think is very core to, our values is being community first. And ultimately, what we're seeing is that a lot of the activity on Sei is being driven by, a number of these communities that have shown a lot of strength and resilience, despite market conditions over, the past few months.
Justin, so as Jay mentioned earlier, so the mode of L1 comes through ecosystem, and I think lately we have seen some of the names that kind of have established themselves. There's some sort of a net new application. So on Solana, there maybe we can say Deepin, or on Base we can argue it's social. Can you highlight some of the dApps that you think are novel, very net new in the crypto space, that is just made in Sei or made in that ecosystem?
Yeah, I mean, look, fundamentally, without spilling too much info, there are a number of things that we're super excited about that are going to be coming out soon here. But what we're seeing right now today is that the same applications that function well on other chains function better on Sei. They're faster, they're cheaper, they're easier to onboard to, and ultimately it's a better user experience, right? And so a great example of that is, something like a Dragon Swap, right? Where trading on Dragon Swap is as cheap, as fast as it is on any other chain, and in many cases, much faster. Similarly, we're seeing things like this on perps exchanges, right? Vertex, which is a multi-chain perps protocol with significant volume, recently came over, and they're seeing a ton of success on Sei, in part because of how low the trading fees are, right, as a function of how low the gas fees are, and also just because of the user experience. I think one thing that we'll touch on a little bit later is the importance of time to finality when it comes to user experience. Whether that is in DeFi, right, where latency obviously matters, but whether it is also in consumer apps like games or social protocols, et cetera, where if you are submitting a transaction and it takes 10 to 15 seconds for it to go through, that is not a competitive experience with Web 2 apps today. If you went to the next Facebook and it took 25 seconds for you to make a post, you probably would be churned from that platform, right? And so what we're seeing on Sei today is that people are able to build things like games, social protocols, DeFi applications, et cetera, where the user experience can really look and feel as good as it does on the Web 2 side, but with the best parts of Web 3 on the back end.
Justin, maybe you can also go over some of the metrics, the growth that you guys have recently experienced on volume side, TVL side, because of the latency and because of the throughput of the chain.
Yeah, so kind of like I mentioned earlier, exponential growth here since really the launch of Sei V2, right? So if you look, just a few months back in March, TVL sat at around 18 mil, right? And daily active addresses sat around 14K, right? Somewhere between 14 and 20K. What we're seeing today is a massive increase here. TVL is now sitting at roughly 135 mil, right? So, roughly a 7x increase from where it was just a few months ago. And similarly, on days like today, there's 57,000 daily actives, right? And at points, this has spiked to, upwards of a few 100,000 daily actives. So what we're seeing is that people are bought into the vision, they're taking advantage of the tech, and ultimately the user experience is is keeping them within the ecosystem, right? We're going to have more information soon on retention rates and things like that as we have, more data there. But effectively what we're seeing is people are coming in, they're testing out these apps, recognizing how much stronger the experience is versus what they're used to on various L2s or even some of the other L1s. And then they're staying around to see what else they could do in the ecosystem. And that is kind of the exact flywheel that you need if you're building a new ecosystem like we are with Sei.
Justin, do you have any color on the volume? How has the volume reacted recently, given these metrics?
Yeah, similarly, on-chain volume has also gone up in multiples. Would have to pull it up here, but it's something like 5 to 10x from what it was just a few months back. What we're seeing is that obviously as you have more TVL in the ecosystem, more users, volume by default will increase. But also I think what we're seeing is an increasing number of folks who are using Sei for transactions that may not even involve the native Sei token, but actually involve other chains, right? Just because this is the most price-effective way to do it. And so, for example, right now, if you're going to go over to something like Vertex, right, you can trade options on Bitcoin or, perps on Bitcoin or Solana, for example, for as cheap or cheaper than anywhere else, including centralized exchanges.
And what has you guys' approach been on ecosystem building? I know there are different approaches. One approach is give out grants. The other approach is just work on the memetics, and then the community will form like similar to Berachain. So what have you seen works, and what is the ecosystem building strategy that you guys are adopting?
Yeah, so it's been kind of multifaceted, right? And I think the key here is there is not one single thing that you can focus on in itself. You have to focus on really covering a bunch of bases, right? So certainly we have an active grants program. We also have kind of a community-run grants program via Gitcoin that's been incredibly successful at really incentivizing what users want to see, which I think is a very big change from what we see in most ecosystems today. Similarly, a lot of growth in sort of the organic kind of mimetic side of things, as you mentioned, right, where people are really bought into the community aspect. They're bought into, their particular NFTs they hold, and ultimately this is shown through tons of kind of native organic users that have honestly been onboarded by their friends, right? Which is one of the best signs that you can see. But fundamentally, I think the ecosystem building strategies that we have has, again, been very pragmatic based on the experience that I and others have seen in other ecosystems. And so when you look at kind of what has worked elsewhere, I think most people can identify that, there is certainly a lot of fluff in Web3. And it can be very difficult to discern, okay, what actually adds value to our chain. Our team has taken a fairly data focused approach here where we said, look, historically what you see is that there are two main drivers for ecosystem growth. There are native teams, right, which are built exclusively, primarily on that one chain, and they ultimately become evangelists for that chain, right? Bring new users, bring new liquidity, and ultimately bring more projects in by being successful, right? The other side of this is non-native apps that we can consider blue chips, right? Good examples of this that you currently see in the Sei Eco are names like OpenSea and Bancor and Frax, et cetera, where they are likely not going to be the defining app for your ecosystem because they're not native. Neither are they really going to be the core evangelist for that ecosystem. What they do add, however, is enormous credibility. They add users, they add liquidity to the ecosystem, and ultimately they can serve as a top of funnel so that people know, hey, this is an ecosystem that I need to take seriously. What we've been very pragmatic about historically is saying, okay, can we easily separate teams into one of these two buckets? And if not, do they fit into a third bucket, which is basically, hey, these guys are kind of grant farming, going from chain to chain and just looking to take advantage of the incentives that, money chains have available. And those are the ones that we have to be very careful to avoid. And candidly, where I think most foundations get caught up in, ongoing stretched conversations that are very expensive, both in terms of time, but also obviously in terms of dollars.
So just a hypothetical scenario. Let's say, Justin, I want to build a deep end project on Sei. What are some of the help that can be provided by the foundation or by some of the, maybe by yourself, including to a new builder in the ecosystem? Like, what are some of the help that you guys offer?
Yeah, so fundamentally, how I think about this stuff is really how can we be, and pardon the cliche here, but how can we almost be the sixth man to this team, right? How do we serve as this sort of omnipresent, force within, the ecosystem where, look, we're not going to be driving your strategy, but what we'll certainly do is help you with things like product strategy, with things like marketing, with things like, go to market and tokenomics, right? And ultimately also helping with things like investor intros, right? Making sure that you're in the right place financially to actually go out and build this product, right? And that you're thinking about things the right way. I think ultimately when you think about, what is the value that L1 foundations can provide, one of the most beneficial things that we can add is experience, right? We've seen hundreds of projects and for some of us thousands of projects launch. We've seen what works and what doesn't. And we can very quickly look at a pitch deck or a product marketing plan or a roadmap and say, hey, historically, this has worked, this hasn't worked, and this is why, right? And so I think a big part of how we want to be helping teams is really in that sort of one-on-one, let's call it non-scalable sort of support, where it's not just, hey, here's some money and, go through X, Y, and Z and good luck, but really, how do we work with you to really accelerate your growth and ultimately put you in the best place to be successful in the ecosystem?
Yeah, final question on this segment. Maybe it goes for both of you guys. How do you think the Sei community and the culture is different from other ecosystems?
Yeah, I can take a stab at this first, and I'm curious to hear Jay's thought here as well. But generally, from what I've seen and interacting with the community is fairly unique in that it is a very young, kind of like Gen Z-centric, excited community that is very enthusiastic, right? When you look at many ecosystems today, it is very tricky to discern where there is sort of real organic traction versus people who are excited because they know that there's an upcoming airdrop or some other financial incentive at play, right? What we're seeing here is that we have tons of people that are logging on every day, hosting spaces from 6 a.m. to 10 a.m. during their workday, right? And doing this not because they're expecting something in return, but just because they're genuinely excited about what they're seeing. And this kind of flows directly into, kind of the meme culture on Sei, right? Where a lot of it is centered around Saiyans and Dragon Ball Z and this sort of whole aesthetic of, this like cartoonish vision for, the future of the ecosystem that I think lines up very well with one, our backgrounds and kind of what we think is interesting, but two, really where we think crypto is going, which is really this like sort of explosive, almost like magical power, right? That is a little bit beyond just, hey, talk about this and get some airdrop.
I just had a throwback to back in December. And that time, Justin mentioned Pallet Exchange. And Pallet Exchange at the time, they were basically handling all of their traffic on one EC2 instance. So there got to be a point where there was just too much activity happening on Sei, and they needed to have like a wait list for people to even enter the website. So you would just log on and you would like have to enter the wait list, and then you'd have to wait for a few hours to be able to go and trade NFTs on Sei. And one thing that like really struck me at that time is that our community is real. Like what Justin was mentioning before around how most communities that are, especially if it's like a pre-launch kind of ecosystem, those communities oftentimes are not real. Like it's just airdrop farmers that are there to be able to get the airdrop and then afterwards like go and do something else. I think in Sei's case, like all the traction we've been seeing has been completely like not tied to like anything where it's like airdrop farmers or something. I think it's just been completely legitimate activity. And that's what's made me extremely excited about both V2 and like all the activity that we've been seeing. Like we are at honest inflection point right now where we're at the start of something that is like pretty major. We've already started seeing all the metrics, like all the traction that Justin was talking about. And I think it's just trending in a very strong direction. So yeah, I think it's probably the biggest thing to note outside of the personas and all that is that like, yeah, it's just all real activity right now.
One other thing I'll add here that's like a great kind of, that basically shows the case in point here. We've had this ongoing sort of campaign through Gitcoin where, as I mentioned before, it's basically community-directed grants, right? Rather than grants coming sort of exclusively at the discretion of the foundation. In our most recent round, which was dedicated towards Sei creators, there were over $80,000 in donations from the community. There is no expectation there that they're going to get anything financial in return for that. It is purely because people are so excited to support other creators in the ecosystem, right? And this was across 10,000 plus actual individual donors, if I remember correctly. And so what you're seeing here is like, this is an organic community that is willing to basically put their money forward to see content that they like, right? Because they're spending a lot of time here organically and they just want to have the best experience. That is one of the best indicators that I can think of a genuine community, right? Because rather than them expecting to sort of extract this value out, they're actually pushing value back in.
So guys, final segment of the podcast is a rapid fire round. We'll keep it short and we'll keep it fun. So first question, and maybe I'll start with Jay first. Pet peeve in crypto.
Projects that are claiming to be decentralized that are closed source. Like I think fundamentally, if you're a closed source project, you can't really be verifiable and trustless. And I think that really detracts from like really being decentralized.
What about you, Justin?
I have two that I'd like to touch on here. One of them is speed equating to block time. So in many cases in crypto, we talk about speed in the context of block time, when in reality, the thing that matters is time to finality, right? And fundamentally, there's a pretty big difference between the two of them, right? One of them is like, hey, you're just included on the block. The other one is this is actually confirmed by the chain, right? And you can actually go on and make additional transactions after that. So I guess one of my big pet peeves there is, yeah, people thinking that block time equates to speed, when really I think the proper measure should be finality, right? Another one that I think is probably a pretty hot take as well is, especially for consumer apps, crypto has become the product in many cases, right? And when I say that, what I mean is that people are fundamentally using some of these consumer apps because they want to interact with crypto. I think if you want to really reach the masses, the shift that's going to happen is that the product has to be a genuine product. It has to be a game. It has to be a social network. It has to be whatever it's going to be, right? And crypto is just the underlying sort of mechanism or rails for which you build that product, right? The best example I would say here is no one's going and testing out a game because you say, go test out this awesome Unity game. They're testing out the game because of the content, right? And fundamentally in crypto, I think we are still in a spot now where many of the products are the crypto, are the kind of, speculative nature of it itself, rather than an actual product supported by crypto rails.
Jay, if you weren't building Sei, what would you be doing?
Yeah, so we actually went through this entire iterative journey where we ended up building, at least trying to build different parts of the crypto stack. And the part that is the most intellectually interesting to me continues to be the base layer. I'm honestly pretty happy where I ended up in terms of building an L1. I think realistically, if it wasn't Sei, we'd probably be building some other type of crypto infrastructure and largely solving the same type of problem.
What about you, Justin?
Yeah, for me personally, given the response to the last question, this shouldn't be too surprising, but I would probably be building at the application level, right? So building something where I think it has the potential to really reach the masses. And again, crypto is not the product. It is basically the back end for a product that people actually want to use.
Any particular vertical? Let's say if I were building something, it would be something in Deepin. Maybe you have a preference for a certain vertical, Justin.
The three that honestly, to me, were like personally the most exciting were Deepin was certainly one of them, gaming and social. And I think in the social side, what we've seen here is there have been a lot of experiments as far as what Web3 social could look like. But ultimately, I think the user experience still has not been there compared to, the Web2 incumbents. Once we see something where the user experience looks and feels as good or better than what you see with Facebook or Twitter, we'll be in a very different position, for crypto as a whole, right?
Jay, for you, a better tech or stronger network effect, if you were to select one?
Oh, stronger network effect for sure. And I mean, this ties into, I think, the conversation we're having before. I think good tech is good for a short period of time, but then it becomes commoditized in a way where if it's open source, especially, like everyone's just forking it. The strong network effects are much harder to just easily fork.
On my end, I'll say network effect with sufficient tech, right? So similar to kind of the sufficient decentralization, thing that we were talking about earlier here. I think you need some base level of tech, right? You need something that is at least like scalable to a certain degree, at least at some level of performance, doesn't exclude the masses as far as like being cost prohibitive. But ultimately, the thing that wins out is network effect.
So guys, assuming we are in 2025, second half of 2025, for L1s and L2s, what do you guys imagine? Will there be a blue ocean or red ocean?
What do you mean by blue versus red ocean?
Blue ocean, there's still more opportunities to build L1, L2s. Red ocean, the market is saturated. Chains are eating each other.
Oh yeah, I mean, by second half of next year, we're honestly so early overall. There's going to continue being tons of innovation happening here. So I think there's a lot of opportunity that still haven't really been explored yet. The blue ocean.
Yeah, my hot take is there's still a blue ocean here, but the bar for what counts as differentiation will continue to be raised, right? So if you're going to say, hey, we're building for example, more performant chain, it's going to have to be orders of magnitude more performant than the existing chains that have strong network effects, right? And as time goes on, this will only get harder and harder, right? So if you're going to try to launch a competitor to L1 in 2028, yeah, you're going to have to look and feel very different than kind of the incumbent user experience that we have today, right? So I think that overall, we see a blue ocean. We will see more projects that continue to launch and some that continue to grab market share. but it will be increasingly difficult, and the differentiation will need to be more and more.
Oh, I was just gonna say for like more specifically, I think I agree with everything that Justin said. I think that specific areas that we'll see a lot more exploration on next year is like parallelizing layer twos that are using Ethereum for data availability or that are using alts, like specifically like parallelized EVMs as like L2s. I think that's been extremely underexplored at the moment, and the approaches that are being taken are extremely centralized. I think there will start to be more decentralized approaches that are being considered in the next like 6 to 12 months for sure.
So when you say more decentralized approaches, I'm assuming you mean things like decentralized sequencer. Is that what you're getting at?
Exactly. Decentralized sequencers where full nodes are able to validate transactions without needing to like have trust assumptions based off whatever the sequencer is saying. Like I think there's like certain approaches right now where like full nodes are basically just like state syncing after every single block. And that's different than like actually verifying transactions by like consuming ZK proofs or like running through every single transaction. So I think there will be a lot more decentralized focus.
Another follow-up question, Jay, for you. Let's say by next year, what are other areas in the L1 stack you think will also continue to see significant improvement?
Yeah, I mean, I think the execution layer is the one candidly that will have the most iteration happening in the next year. I think this is from like largely a purely practical business reason. Like I think different parts of the stack are going to be more and more commoditized moving forward. Things like DA, I think, is already pretty commoditized. I think that things tied to like stateless compute is also largely commoditized. I think people are going to be experimenting a lot more on different forms of like state access, different forms of parallelization. So things that'll be tied to the actual execution layer for like stateful transaction execution.
Maybe Justin, I'll start with you on this. Maybe you can tell our audience a little bit about your crypto portfolio, except for Sei.
Yeah, so I mean, outside of Sei, continue to have high conviction in, as you can imagine, Ethereum, right? Given the fact that we're so bullish on the EVM, right, and some of the value accrual that's continuing to happen there, right? And then I would say the other one, as far as L1s, is Solana, right? Obviously, was an employee at Solana Labs. Have worked closely with a number of the members of the team. Think that they are very, again, pragmatic about how they make tech decisions. Have been the leader in many of the areas that we've discussed today, and ultimately is a team that I'm confident will continue to ship interesting product features over the next few years.
Yeah. From my side, it's actually the same L1 tokens. Interestingly, I don't have any Bitcoin at the moment. It's largely just ETH and Sol, and for what it's worth, I've been trying to not be over invested into crypto, given that I'm already investing all my time in crypto. But yeah, I remember I got into like I bought a bunch of like Solana NFTs back in like 2021, 2020, like early 2022, still holding on to them. And I feel like I've just qualified for a bunch of random stuff from like holding on to those and like just being involved in these ecosystems more broadly.
Guys, final question before I wrap the podcast. Question I should have asked you but didn't.
Yeah, nothing from my side.
Yeah, I can't think of anything too interesting from my end that that would be spicy. But yeah, I think you did a great job here covering the basis for the Sei's high level TLDR.
Great. Thank you guys for joining us. I learned a lot about Sei. It was great having you guys. Yeah, so thank you for joining us.
Thanks for having us on.
Man.
Thanks, guys. This is your host, Mehdi, signing off.
This podcast is for information purposes only and should not be considered as financial advice. Any opinions provided in this podcast reflect the views of the speakers only.